Michael Burry, literally the dude that bet on the collapse of the subprime mortgages ahead of the 2008 financial crisis, is, guess what? Worried about the current economy. So this is a very important video, so please do watch till the end. So let's get started. As of August 12th, there has been 4 consecutive weeks in the green for all the major financial indices. The S&P 500, the benchmark index, rose 134.96 points or 3.3%. The Dow was up 2.9% and the Nasdaq was up 3.1%. The reason for all of this euphoria is because investors are now convinced that the Federal Reserve will probably be less aggressive in its policy of raising rates to fight inflation, which was at its highest in 4 years. The Consumer Price Index for the month of July was estimated to have risen 8.5% from last year, down from the 9.1% record in June, and is firmly inside the street consensus forecast of 8.7%. Investors, however, prefer to ignore any negative signs, such as comments made after the inflation figures by members of the Fed, suggesting that their fight against rising prices was far from over. The president of the Minneapolis Federal Reserve Bank said that the central bank is far away from declaring victory and still sees the need for a Fed funds rate approaching 4% by the end of the year. As you all already know, that inflation has been a dominant topic of discussion in the markets for several weeks now. Many experts fear that an aggressive rate hike by the Fed is likely to cause a hard landing on the economy. Basically, a recession would be inevitable if the central bank continues to raise rates so strongly. Burry warns those who think the economy is probably out of danger. In a recent tweet, the financier explains that there is another fact that could probably have further problems for the economy. Households continue to spend as if nothing has happened. Burry believes that consumers' growing indebtedness poses a serious risk to the economy. Net consumer credit balances are rising at record rates as consumers choose violence rather than cut back on spending in the face of inflation. Burry moreover added, "Remember the savings glut problem? No more. COVID helicopter crash taught people to spend again, and it's addictive. Winter coming." Burry refers to the stimulus checks received by a large number of Americans from the federal government to avoid the collapse of the economy during the pandemic. He suggests that households continue to spend money without looking, which also affects their savings. In doing so, Americans are putting themselves in a precarious financial situation while inflation remains a drag on the economy. Moreover, some experts believe that stimulus checks contributed to the US inflation. As often with Burry's tweets, it's sometimes really hard to know what he means. But in July, he suggested that he foresees a credit crunch for consumers. Credit and debit card spending, which accounts for more than 20% of the total payments, gained 8% year-over-year, while card spending per household jumped 5.3%, easing from a 5.7% in June. Consumer sentiment jumped sharply in August to 55.1, ahead of a street consensus of 52.5 and nearly 4 points higher than the July reading. Burry also marked his difference with the majority of investors by warning that the current rebound of the Nasdaq, which includes a majority of the technology groups, does not mean that the confidence has returned. He said, quote unquote, "Nasdaq up now 23% off its low. Congratulations, we now have the average bear market rally. Across 26 bear market rallies from 1929 to 1932 and 2000 to 2002, the average is 23%. After 2000, there were 2 40% plus bear market rallies and one 50% plus rally before the market bottomed." Now, Burry obviously deleted his tweet, but this actually provides a lot of insight and is a major indicator to maybe start saving a little bit more money than you were, or focus on where all of your money is going. There's obviously tons of videos on YouTube on personal finances, how to save money, what you can do with your money so that it would go in a better place and help you financially. So I hope you like this video. Burry's tweet was very insightful to me in general, because honestly, like I said earlier, the market was up literally 4 consecutive weeks in the green. So it's kind of crazy for somebody as knowledgeable and somebody that knows the market so well like Burry to say something that maybe we all need to pause and think about, because inflation usually is at 2 to 3%. It's still at 8.7%. So obviously there is a high chance that a recession could happen. So the goal here is just that we need to start saving our money and just knowing where our money is going, because obviously this is far from over. So I hope you liked this video, and I shall see you in the next one. Bye.